Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Trading coming at you with a on-site live interview with one of my favorite companies, and I've got a new gentleman, and we get to hear a different voice other than Peter Evans. Peter Evans, CEO of Xtract One.
Good to see
you,
Joshua.
Joshua, good to see you. Joshua.
Douglas.
And Joshua, you're new to this story.
That's right, Tim. I've been here about 9 months now.
9 months?
Yeah.
Okay. Now, you and I have had an opportunity to speak a little bit without Peter hovering over us. And I asked you, first of all, give us a little bit of your background.
Yeah, so I have I don't want to admit it, but going on close to like 3 decades of technology experience, both from an engineering side and even from a product side. Prior to coming to Mimecast, or not Mimecast, I was at Mimecast, but coming to Xtract One, I was also 12 years at Raytheon, where I helped them do a number of go-to-market activities, including building out a product and doing their joint venture that actually became ForcePoint. I was their first CTO there.
Okay. Raytheon's kind of a big company, huh?
It is a big company.
Yeah.
Yeah.
So you had an opportunity to take another job that actually paid a higher wage than this one.
Yeah, I did.
Tell me why you decided this one.
Well, it was simple for me. I had the opportunity, I was afforded the opportunity to look for a job that I wanted. It didn't have to be about pay. So when Peter and I spoke, I fell in love with the mission, number one, because I wanted to do something beneficial to, the world. I've got 3 kids at home. I actually moved all around the world as a kid. My dad was in the military, and I just love the idea of protecting people and making sure that they're safer. Having lived in some tough neighborhoods, and even with some things that happened in my life, protecting people is very important to me.
Now, I love that, and I love the fact that here you see an opportunity to continue the innovation, right?
Yeah. Yeah, I mean, we have plenty of opportunities to continue the innovation. In fact, when I first came, Peter and I talked about a few roadmap items. He actually asked me my ideas. Turns out he wasn't revealing all of his cards, because some of the things I said I wanted to do, he actually already had thought about, and then we started talking about it even further. In the last 9 months, we've stabilized the product tremendously. We've actually released View, and we're on the verge of releasing some more things on the roadmap. The team collectively are all excited about making it happen.
Yeah, it's really interesting seeing what's happening in the engineering team right now. We'll go do a demo or an event, or we were at the Sphere yesterday for a big customer event, and seeing the excitement in the customers' eyes, like some significant Fortune 50 type companies, and they're coming up and going, that's so cool, with some of the things that they've got an early view on that we're working on, and a lot of it's come from the team. And so the team's getting that market feedback. All engineers get highly motivated by knowing the things they're working on are things that people value. Right. Nobody wants to work on something that's shelfware, right? They want to work on something that people love and buy more. And so when they see the reaction from some of the customers, we brought some of them up to our labs in Toronto, had them kind of kick the tires on some of the things we're thinking about next. And when you see their eyes get really big and say, that's, I think a quote from the one gentleman, his name was Jed, he said, that's about the coolest thing I think I've seen in 10 years. And when you get someone who's like a well-known technical expert, like impressed, that's great. It's a great testament to kind of the quality of team that we've got in the engineering group right now. And they're just doing some like bending the laws of physics type work right now. So it's really one step further. So why have I got an RFID sensor that goes beep that no one pays attention to when I walk out of the Target store, a separate device for people to swipe their badge and credential in, or punch a time clock, or watch for weapons? You know, it used to be we carried a separate key fob for our car, a separate wallet, a separate cell phone, maybe another device. Those things are all integrating together, where now I can just take this out, right, and pay. I don't need my wallet, or put it by my car and open up the door. So everything's consolidating to a single platform, and that platform provides that innovation. So you'll see the same thing happening with security, with credentialing, access control, weapons detection, all these sorts of things coming onto a singular platform. That's where we have a competitive advantage. That's what the kind of vision we've been talking about, because those things over there, they're very lightweight in terms of the technology, the hardware that's in them, the real value in the software that allows us to say yes to a customer when they say, can you use your facial recognition to identify that my employees are arriving and leaving on time and run that into my time clock? Absolutely.
Right.
There's so many cool things you can do with a platform, in the same way that this has become the singular platform for starting our car, paying our bills.
All right. So you've mentioned the Sphere a couple of times.
Sure.
$2.2 billion facility owned by Madison Square Garden.
They love it. They love us.
And it's never really been, there's never been a full-blown press release where it was just said, hey, it's us.
Yeah.
We're the ones that are taking care of that facility, right?
Sure.
And that's, Madison Square Garden's got their reasons, but Madison Square Garden also put an investment tranche in you guys.
They did. They're very happy with it.
Right?
Yeah.
Stock price has not reacted, and of course, you know, that gets all the retail investors upset.
Of course.
And I just want to talk to all the retail investors out there. It isn't just Xtract One.
Yeah.
It's any company in the micro cap and small cap space.
Yeah.
And it has been for, 34 months. And I understand that it's tiring.
Yeah.
I mean, it really is brutal.
Yeah.
To see every day, it's not just your company, it's every company. If you are big in small caps, you are not feeling good right now.
Yeah.
Right?
Agreed.
It's across the board.
Yeah.
So, one of the things that I think, and I did get a couple of questions, and I'm gonna go ahead and ask him.
Absolutely.
But understand this: Peter gets these questions, the same questions, over and over and over again. And what I think is really, really important for retail investors to understand is you are in early. If this is not an easy game, you have to be able to have patience when you are in something early. And what I mean by that is funds cannot big funds cannot even look at these guys right now.
Right.
They can't.
Yeah.
Because, number one, they have covenants that won't allow them to invest in stocks that are below a certain price. Some of them are $1, some of them are below $5, right? And you're on the TSX, right? So, I mean, these are challenges that are not solved in a month. They're not solved in a year.
Yeah, you're absolutely right, Tim. I mean, I love our retail investors, and there's probably 24 of them who have got my personal email, and I get the emails from them all the time. There's one guy who thinks I'm his best pen pal, and I keep trying to tell him, if I answer all of your emails, I won't have time to run the company, right? And God forbid that 10,000 of them all email me every day and expect an answer back. And there's one guy who emails me and says, how come you haven't answered me today? I got a company to run.
Right.
Okay. So, and if I had to answer 10,000 emails every day, that'd be an interesting thing because we'd never get any work done. But joking aside, I'm not happy with the stock price either. But you're right, there's 2 or 3 headwinds on the stock price. Despite the stock price, the company's doing very well, okay? You know, there's companies that we can't announce publicly, but I wish we could. I'd give my left arm to announce them. But the stock price has got some headwinds against it. One is large institutional investors. I've probably done no less than 50 interviews with institutional investors, family funds since January, start of January. Probably the third week of January when we really ramped things up. Everyone loves the story, but you're right, they've got covenants. They can't invest in TSX companies. They can't invest in companies under X dollars a share. They can't invest in companies whose liquidity is below a certain number of shares traded per day.
Yep.
Right? Because they want to have an exit position. If they ever want to sell the shares, they want to be able to do it in 5 days, not 500 days.
Right.
So they're looking for more liquidity in the shares. So these are things we're trying to work on to improve more. Could we get off the TSX to NASDAQ? Absolutely. But it takes about $2 million a year just to service being on the NASDAQ. And frankly, at this point in the company's maturity, with $2 million, boy, have we got some innovation we could bring to the market that would make us a $100 million company.
And I can tell you right now that I would be extremely disappointed if you were to announce that you're going to the NASDAQ prematurely.
Yes, absolutely, because the NASDAQ is unforgiving, and there's a long history of Canadian companies who've gone to the NASDAQ, and you look them up 3-4 months later, and they're orphans. Their stock price is tanked.
And there's nothing worse than making it to the NASDAQ and getting kicked back.
Yeah, exactly.
Because you're not coming back.
That's right. At that point, you're a dead company. So we will go to the NASDAQ to open up the aperture for more investors at the right time.
Which means, just so everybody knows, for me, that would mean the wind is at your back.
Yeah.
You have reoccurring revenue for a good long while. You've got extended contracts where you know this revenue is coming in for X amount of years, right? You're at cash flow. You're at profitability.
You're at profitability.
Right? And there's no end in sight.
Yeah, there's nothing holding back the company, no risk to the company.
Right.
Once you're at cash flow break even, you can manage your OPEX costs to make sure you stay there. And as you said, you've got enough recurring revenue. They've got high predictability in your revenues, and so you can forecast and provide guidance correctly. And so, is it in our future? Yes, at the right time.
Right.
Right. Would I have loved to have been on NASDAQ a year ago? Absolutely. We probably would have got crushed if you have one soft quarter.
Yep.
So we've got that headwind against us right now. I think the second headwind is something you mentioned. Right now with the market recovering, a lot of money is moving to the large traditional tech stocks. The Apples, folks like that, the Facebooks and things, Tesla.
NVIDIA, right?
But like everything, if you watch the market goes in cycles. And there's always sort of, the first segments that drop when the market drops are the first ones that recover. And there's always the second, the third, the fourth that recover. The recovery's coming. The fundamentally best thing we can do, keep on delivering 2-3x growth in top line, both bookings and revenue. Keep on managing our OPEX in the way we have, where we have a leverage play. We've built a leverage business model where we don't have to double our OPEX to double our revenues. will our OPEX spending go up this year? Probably. 10,
Growth
15%?
consumes cash.
Absolutely it does.
Right?
Right?
Which means, look, I hope you guys have to buy a lot more of these columns.
Yeah.
Right? I hope you have to buy a whole bunch more. Right? Triple what you've had to carry because the orders are that big.
Yeah. Well, think of it this way. Simple math. Not saying we aren't, but we're talking to a number of school districts. Some of these school districts have 60 schools, 100 schools, 200 schools. Let's take one that's 200 schools, okay? 1 lane each, okay? 200 lanes.
Yep.
That's a heck of a deal. But I have to buy the parts, manufacture, have the cash to pay those bills, then ship, then install, then the invoicing starts. So there's a lag time in there.
Right.
And probably the cost of serving that school is in the range of $4 to $6 million for componentry. So you start to think, okay, where do I get $4 to $6 million? We all want that deal. My investors want that deal. I want 10 of those deals. But investment of cash then gives us the balance sheet to be able to manage the cash flow.
So that's the other question that comes up is people want to, and I already know what your answer is going to be on this, but I'm going to do what I said I would do is I'd ask the question.
Sure,
right?
Of course.
They want to know, so what is the average cost per unit? And then what?
We have not disclosed
I
our
know
price
that. I know
intentionally,
that.
and I'll tell you
know
why.
it is.
I will tell you why. Sometimes, and this is to me is the stupidest thing from a business strategy point of view. We're in an early stage market.
Yep.
Go to any Harvard business school professor, and they will tell you an early stage market where you've only got like 1% market penetration by all the players. You're in a land grab. You're not in a price competition. If I'm selling servers, which is a saturated market, and it's HP versus Dell, or I'm selling security guard services where it's Securitas versus Allied Universal, and they're competing on price per dollar per hour, I'll bid it at $22.10. I'll bid it at $22.08. It's a race to the bottom.
It's a race to the bottom.
Right? We're not in that stage in the marketplace. However, we're seeing unnatural behaviors from some competition who will say, I'm going to win at any cost and any price, even if I lose my shirt. So I don't want to tell them my price.
Right.
Right? We're going to compete on value first.
And let's face facts.
Yeah.
Listen, the names that you are allowed to share, and you have to remember that there are companies out there that are just not going to allow Peter to divulge the fact that they just secured their facility for whatever reason, right? They just want to keep it under wraps.
Yeah.
That's their right.
That is a right. And we get this question all the time from the investors. This past week, there's been some very strange behaviors occurring on our shares, where someone's been selling 500 shares every 3 minutes, that's a very interesting scenario I've never seen before in my life. And we're digging in to find out why. Is that against SEC regulations, for example? And so we'll get to the bottom of that. But the first thing happens is I get emails saying, please put out a press announcement. As if there's some magic wand that's going to stop that effect. It won't. If someone is determined to sell 100,000 shares, they're going to sell 100,000 shares. Now, if we know them and we can talk to them and talk to them about the future of the company and perhaps sway them, we will. But if we don't know who they are because they're hidden behind a Fidelity or Morgan Stanley account, there's not only so much we can do. But when 3 years ago, when there was a big question mark hanging over the company, were we a real company? Did we have a real product? Was it all just smoke and mirrors? A press release would have a significant impact. When we announced the Office of the Inspector General, I think our stock went up 20% that day because it was validation. When we announced organizations like Madison Square Garden or Kia or Hyundai or people like that, that was validation. These are not fly-by-night folks. These are folks.
How about the TSA?
Yeah.
Right?
These are people who put their hands on the gear and test the crap out of it. And so it's validating that, yes, we actually have a real product, which was a big unknown before.
Right.
So now what you're seeing with a press announcement is has very minor impact because it's now a different question that is being asked. It's not, are you a real company with a real product? It's, okay, now show us the fundamentals of the business.
So that's where we are right now.
Exactly.
Right? So look,
exactly.
If you're an astute investor, you realize the company is growing, that consumes cash.
Yeah.
Right?
Absolutely.
So and if you don't know, I'm sorry to break this to you, but there's probably going to be a capital raise. And that's just the reality. I mean, why do companies go public?
Yeah, to raise capital.
To raise capital.
Fundamental reason is to raise capital.
That's why they go
Yeah.
public.
Nobody really wants to go public because the overhead with the auditors, I'm not a finance guy.
Right.
Drives me crazy having to go through audits every quarter and going through every document. I'd be out with customers. That's what I'd much rather be doing. But it's why you go public, to raise a lot of money. And I just gave the example of a school. I don't have $6 million idly sitting in the bank, just doing nothing, gathering dust. If I did, I'd give it to Josh, because Josh has got 5 really cool ideas that every customer said, as soon as you do that, I'm buying. And so now I get 2, 3, 4 schools suddenly saying, we want to go for September season. How do I fund that?
Right.
And you have to be able to fund that.
So there's good reasons to have to raise capital.
Absolutely. But
right?
You want to raise smart capital. You don't want garbage capital.
Okay, so now that's where we get into the thick of things, right? There is stupid capital raises and there is intelligent capital raises.
That's
right.
Yeah.
I do not think in my heart of hearts that you are going to make a stupid capital raise decision.
We've turned down people who've knocked on our door because they love what we're doing.
Yeah.
I'm going to go on a bit of a tangent. I've always been a big believer, build a quality company and you will attract things. You'll attract people who want to work for you. You'll attract partners who want to sell your gear. You'll attract partners who want to integrate their technology with you. And you'll attract investors or people who want to buy you. And so build a quality company. It's like bees to honey, right?
Yep.
Don't prop it up with false advertising, false marketing. Don't build a company to be sold, because those are always, a sham, right? Build a quality company. It'll attract everything that you're looking for. We've had people knocking on our door wanting to put money into the company all sorts of times. Some of them are these garbage convertible debt deals that would, it'd be an embarrassment to put that in front of the investors. And so we're not going to. It's a tough time for the microcap market right now, but there are quality investors out there and we'll always listen to them. And if something comes that I think is going to help us grow faster, I take an X dollars, and all of a sudden, I think
somebody that's a true partner.
Yeah,
right?
Absolutely. MSG, the folks at MSG opened up the sphere for us yesterday, and said, invite all your customers. Right now, we had a limited number. Right, we had a great event there. We had some come back to smart money. MSG, I think, has been a fantastic deal. They've been such a great advocate. Anytime I've called up their CSO and said, I need. Within nanoseconds, he's called the CSO of this other team, this other venue. He's called the DHS. He's called these people. They open up the sphere to us, and we had...
You opened up a can right there with the DHS. That's the next question.
Absolutely.
That's the next question. What's up with the DHS?
Do you want to answer that one?
Sure, I'll answer it. So
I have my answer, but you need to talk for a while here.
Yeah, sure, not a problem. So we've done the due diligence, and we went through the entire process. We handed that off last year. It has to go through a process through DHS in multiple steps. From our understanding, we're close to the edge, which is basically getting the signature to finalize that.
Yeah.
And as soon as we have that, then we'll be able to announce it. It's a process in the government that you can't always rush.
Right.
We're also exploring other avenues that we can also add in too. So we're looking at MPSA out in the UK. We've done that self-attestation and started that process to send that over. So you'll see more out of us collectively to get that across the line. We have full confidence that we're going to pass and get the Safety Act.
Yeah, it's just a matter of time, and it's a process. We've had feedback from the DHS almost on a weekly basis. Okay, this step has just been done. This step has just been done. Everything they've asked of us, we have done. And done it very quickly. When they sent us something and said we'd like an answer back in a week, we'd have it back in a day. And so we've done everything we can to accelerate the process. Some companies, Oakview Group shared with us that their Prevent Advisors organization, they're one of the only consulting organizations that got DHS, took them 3 years, right? And these are very astute people. So I think from when the DH asked us to resubmit at a higher level to now, it's been under a year. Right, we went through the process once at a DTED level. We had so much efficacy and proof of the value of our product that customers had used it and sent reports about. So they asked us consciously to resubmit at a higher level. So I take that as a very positive aspect. We're very, very close based on all the conversations, and we'll announce it as soon as we've got it. It'll open up some opportunities for us. There's certain leagues and organizations that require DHS, and we've already preconditioned those organizations saying it's coming, and they said fantastic, let's keep on working together. So
All right, so I'm going to bring up something. So right now your share count's right around 200 million.
Yeah.
Right?
Yeah.
Which, in my view, when it starts to get up towards 500 million shares in that range, it starts to get, that's nervous for me.
Yeah.
Right? Now, of course, if you're looking at the fact that at some point you will probably uplist to a senior exchange, NASDAQ, and at that time, I would think it would be wise that you would do a reverse split, which retail investors have an averse reaction
Absolutely
to reverse splits.
Yeah.
Right? Because, well, even though the value of what you own hasn't changed, the amount of shares you own changes, right?
Yeah.
And that's, if you have 1 million shares, that's a bummer if you do a 10-for-1 reverse.
Yeah.
I get it. But at the same time, by reducing the amount of shares that are outstanding, when you have a big news event, the subsequent moves in the stock are much larger.
Yeah, it also helps you with your liquidity issue, which is an issue we have right now, that there's not enough traded on a daily basis, which is why also some of the institutional investors don't want to get in, because they want to know that there's enough liquidity, enough stocks changing hands every day, that if all of a sudden they decided I have to sell, they can in a short period of time, not over a protracted period of time. When you do that reverse stock split, it actually helps your liquidity quite significantly.
Right.
Which is,
and if it's done in a move that's also moving you up to a senior exchange.
Yeah.
And we've already discussed the fact that you're not doing that until you feel as though you've got wind at your sail, right?
Yeah.
You're not just going to do it because it's not a panacea. It doesn't fix everything.
Yeah.
You actually have to work harder to make sure that you don't fall back. Right?
Yeah, exactly. There's a lot of these kind of interesting one-liners that you see from the retail investors. I'm not trying to throw any, cast aversions or disrespect, but, dilution's bad. Oh, reverse stock splits are bad. There's always some history of some company that they're dying, and they're at the risk of getting delisted, and they do a reverse stock split, and then they keep on dying.
Right.
And everyone thinks it was a reverse stock.
They're not a real business.
They were a sinking boat anyways.
Right.
Right? So to your point, make sure you're a real business, make sure you're cash flow positive, make sure you got the wind of your sails, make sure you've got a lot of predictability in your revenues, your margins, your profitability, your operating model. Back to the fundamentals that we're being measured on now. We're not being measured on, is it a real company, put out a press release to prove it. We're being measured on our financial fundamentals. It's why now we actually have coverage. Echelon put out a nice document on us today after the announcement of Co-op Live Arena. And we've got a couple other folks who've put out coverage on us, but we've now got 2 more reports that are coming out on coverage. The institutions are suddenly paying attention to us because the fundamentals are good, not because we put out a press
And let's
release.
face it, the names that you are announcing that you can't announce, these are not chump names. These are big companies that are... they're bringing you in.
We'll announce some smaller deals too, because they're kind of fun, interesting deals, and we like them. And and there's some we can't announce. God, there's like 3 I'd like to announce right now that we can't. They're great deals. They're great deals, and everyone would look at us and go, "Man, they've gone from the AAA team to the big leagues."
And it's not like the revenue hasn't been backing up what you're saying.
Yeah.
Right. The revenue's growing.
Yeah, the bookings and revenue are growing very healthy. The first 6 months of this fiscal year, we did more business than we did all of last year. That's not changing. So, I'm very pleased. And sitting here at ISC, we've had some great meetings. Today we had a healthcare organization that came up, hadn't really heard of us. It was actually the guy at the Moody Center who was talking to someone who talked to them, who said, you got to visit them. All of a sudden there's 30 hospitals they want to do business
and
with.
That's the other thing, right? You've got, as word of mouth, as your name does become more prevalent, right? Then it's just like getting pulled international. You got pulled international.
Yeah.
Right? You didn't go there try to break into international.
International
they
is
said,
very
come
costly.
here.
International is incredibly costly. There's certifications. I drove Josh crazy saying, what's it going to take to get these certifications? Every country has their own certifications, and it's about a $50,000, $60,000 process just for those. Then you've got tax reporting. Then you've got incorporation. Then you've got to have,
support.
We were trying to get a piece of gear into England, and since Brexit, the process to move a piece of gear from France to England for the NPSA testing that we mentioned earlier, it's taken 2 months. of paperwork.
That's insane.
And it's crazy stuff. And so you have to choose to go there judiciously. And usually the way I've done it before is, here's a very large account that's willing to pay a premium price because they like what you do. So there's a ton of margin there, and I can take a chunk of it and say, okay, that's my hassle factor.
It makes sense.
And it's still profitable.
Yeah.
Yeah.
Right?
Otherwise, it doesn't really
And
make
that's
sense
without
to me.
your new innovations that are coming.
Yeah.
Correct.
That's
Right?
Yeah.
Which is, I get the sense just here from Josh, this is going to be like a wow moment. I don't know.
There's the industry's constantly going to change.
Yep.
And the key benefit I think that we have is the extensibility of the software to do more, to say yes to customers and actually deliver on it. Because we do hear from customers, yeah, they told us yes, and then when we signed the contract, they said no. We hear that a lot from others.
Right.
And our ability to say yes and actually deliver, like we did for MSG, which is why they chose to invest in us, because they saw the future. Yeah, I think we're in a good position.
Yeah, and I think the overall intent as we move forward isn't just to beat a competitor. We're going to disrupt ourselves.
Yeah.
And we're looking forward to it.
See, now you're talking my language.
Yeah.
Right? I watched, I think, the CEO of NVIDIA the other day, and he said this. He said, you go after the hard problems, the really hard to solve ones, because your competition is just the problem itself will
It's
keep
too much for them.
people away from it because it's a really hard thing to do.
Yeah.
That's right.
Yeah.
Right?
Yeah, and we love those hard problems.
Yeah. Yeah. I mean, if you look at it
so
right
listen, I think we answered the questions. I
hope we did.
I think
But
we,
trust me, Tim, I'm going to get them next month and the month after.
yeah,
the month
you
after.
probably will,
Yeah.
but hopefully, then you can just direct them over to watch my show, and
Absolutely.
then they'll be educated,
Yeah,
right?
Absolutely.
No, I mean, listen. In all seriousness, if investing, long-term investing, this is the kind of company that, just this is from my past experience.
Yeah.
It always takes longer than you think it's going to take.
Mm-hmm.
It is a test of your patience like nothing else.
Yeah.
That is why it is so important for me to intimately know who is running the company, what the strategy is, what the vision is, and are they executing?
Yeah.
Right? I can say with conviction that you are executing.
That's our focus.
Right? At some point, someone is big boys are going to notice. The pendulum has swung way over here, all the mega caps. Okay, at some point when they realize that Apple is not going to go from 3 trillion to 6 trillion, and that's a double.
Yeah.
Okay? That's a double. I don't know what would send Apple to 6 trillion if they solve cancer, maybe. But when that money has to go somewhere, because it's not going to go to a double,
it'll go to the mid caps. It'll then go to
where's it
small
got to go?
caps. Exactly.
Right?
Everything is cyclical.
Where is the risk reward right now?
Yeah.
And if you haven't been killed by COVID, supply chain issues, fastest interest rate hike cycle in history, and you're still alive with a growing business. This is not a business that is stagnant. You are growing.
Yeah.
Right? At a good clip in a very challenging environment.
Yeah.
Those are positive things, and it requires you to have conviction and understand, though, be realistic about what you are invested in. Do I know? Yes, there's going to be a capital raise probably coming. What do I care about? Is it a smart raise or is it a stupid raise?
Exactly right. I'm going to add one other thought to that, Tim. We're sitting here in the middle of the ISC floor.
Yep.
Right? 1,000, 2,000 companies?
Yeah, at least.
Everything from camera companies to guys who are doing tags like RFID labels, guys over here doing massage chairs.
Yeah. They are pretty nice massage chairs.
That is a nice massage
They're great
chair.
massage chairs, but how does that fit into security? I don't know.
It's all the stress.
Stress, a lot of stress.
Yeah, exactly. We've got lock companies, door lock companies, all sorts of things. I would hazard a guess that we're probably in the top 5 companies of all the people sitting here in terms of growth and profitable growth, right? In sense of Our GP is very good. It's very healthy, right? And we've kept our OPEX relatively flat. I bet you if we could stack rank all the companies in here, we're probably in that top 5 out of all those thousands. So, and someone can do the investigation. Call me out on it. I think your comment is right, though. The markets have, there's time when people go to commodities, and then they'll go to oil, and then they'll go to blue chips, and then they'll go to, the FANG stocks, and then they'll go to microcaps, and
in all
the
fairness,
cycle comes.
In all fairness, you didn't start this company.
Yeah.
So there is a history there, and there's a lot of people that got involved a lot earlier.
Yep.
And it's been a painful ride.
Yeah.
And I completely understand that.
Yeah.
But here's the thing. The company could have just evaporated and gone away.
Yeah.
Right? Thankfully, what did happen is this guy, Peter Evans, who has turned around a couple of companies, could have gone anywhere, but saw that there was opportunity here.
Yeah. Realistically, I want to say end of 2020, we were dead. We were dead in the water.
Yeah.
We had very little money in the bank. We had no sales. A product that at its core did some very interesting things about detecting weapons, but the packaging was horrible. And the company had some real brand issues out in the marketplace because it got ahead of itself trying to promote a product that wasn't ready yet. And I like what, there's kind of Patriot One and there's Xtract One, right? And I think the journey that Xtract One has been on is a good one and is a good team. We've got a great innovation team.
If you look at the turnaround, you got to be happy as hell. Because you could have been just doing a tax write-off.
Tim, I'm not a happy
man.
No.
Unless
I can,
I know you're not happy, and that's what I love about you.
I want to go 500%. If we did 500%, I want to do 7%.
I know. I get it. And you know what? And that's who you want running the company.
Yeah.
Right?
Yeah.
But it doesn't happen overnight.
No.
It takes time.
It does. But I'm a monumentally impatient guy. You know me. Right?
Right?
Yeah.
I mean, look, and I understand the investors want, they want a triple, double, quadruple, whatever. I believe it will come.
Yeah.
But you're going to have to wait.
If it wasn't going to happen, if all the signs were there, and I get the benefit of the 2,000 emails from customers every day and the 1,000 emails from partners and getting to roll up my sleeves. I was at a great event on the weekend. I love being out with customers, and I love crawling around the concrete and plugging the systems in, and I defy my counterparts in our competitor companies that they can even turn on their systems. They wouldn't know how, right? I love doing that. And when you're out there with the customers and you see people streaming through, and you see all the customers going, this is cool. And then they walk over to the security folks and say, that was great. Can you give it to us everywhere, at every entrance? Yeah, we're on to something special.
You are. And I think investors should be happy that you're not rushing to uplist to the NASDAQ. You're being very methodical.
Yeah.
And if you if you want to feel comfortable about the investment that you have and have conviction, it's with someone that understands the capital markets, that understands the cycles that the markets go through, and that just uplisting to the NASDAQ is not going to fix everything.
Yeah.
I mean, that's experience.
Yeah, it's not. And, again, there's a lot of kind of one-liners out there. Oh, we should go to NASDAQ. Oh, we should, dilution's bad, this, that. It's so much more complex than no disrespect, the armchair quarterbacking, all this nonsense and all that's on the chat boards. Running a company is a complex thing. Raising money is a complex thing.
Yep.
Closing deals with organizations that have done the same technology approach for 20 years
is a complex thing.
The NBA teams have been using walkthrough metal detectors since about 2023, 2025, 20 years. There's a fundamental shift and change there. Schools have never screened children. You'll get a school district with 200 schools and 2 guys running security and IT, and how to kind of move through that whole process. It's complex, but then when you get it done and you get it done right, like I said, one of our customers at the Moody Center picked up the phone, called someone, and all of a sudden we got a hospital that's very interested in us. We're getting that referenceability. We're getting people who believe in what we do, trust what we do, and they're willing to tell two friends. So again, I really think we're onto something special here.
Then I do too. And Josh, I'm glad I got to meet you.
Same.
Because I think it adds a whole exciting dimension, right? I mean, you didn't come from some slouch company.
No.
Yeah.
Right? And you came here because you see it.
Yeah.
And I love the passion of wanting to make the world a safer, better place, right?
Yeah. Watch our dust. We've got some really interesting innovations coming out here. Watch it.
All right, guys. Look, it's a long interview. You've had a long day. I know that. I appreciate you guys taking the time. When you have a significant, like a new product unveil, hopefully that won't be too long down the road, and we can do another follow-up.
We'll keep doing this every so often, and as we do, we'll just keep adding more education to the marketplace, adding more education to the retail investors, and helping them understand what it is and why we do it.
Yep. Perfect.
Thank
All
you,
right,
sir.
guys. Thanks.
Thank
Thank you for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had Peter Evans and Joshua Douglas from Xtract One, ticker symbol XTRAF. If you enjoyed today's interview, do us a favor, smash that subscribe button, give us a share, and how about giving us a like? All of those things are extremely important to us here at Alpha Wolf Trading, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.